They're basically five tests. But the first one goes throughout everything you're going to do as a business owner, and it becomes a profit motive. What is your intent? If you do not have a profit motive and you're just going to play, it is not going to be deductible no matter how hard you try. Hi, I'm Kathy Cregan, CPA of 40 years. I'm with the Tax Magic Podcast. I'm going to give you some ideas today on turning your vacation into travel, deductible travel. And there are some reasons that it can be deductible. The main one is that it has to be business travel. You have to have the intent for business. Now, you also have travel in the 50 states in the United States and outside the 50 states. If you're inside the US, they're giving you an all or nothing. It's either all business or it's personal and you can't deduct it. And their criterion, basically you get about 5 points. Some are more important than others, but nonetheless, they're 5. You can also deduct cruise expenses when done properly. You can deduct a Rolls Royce for rental, but you have to do it properly. So when you travel for business, there's 2 big items. One is the transportation expense itself. And the second is life expenses. Those are the things that would be sustaining your life. Those are going to have a personal aspect to them. Think meals. Meals are something that you need to stay alive with. So during travel, you can deduct some of those. Some of them you can't. So here's a basic rule on travel. There are basically 5 tests. But the first one goes throughout everything you're going to do as a business owner, and it becomes a profit motive. What is your intent? If you do not have a profit motive and you're just going to play, it is not going to be deductible no matter how hard you try. And you're not ever going to be able to convince me so that I convince the IRS. Never going to happen. It has got to be for business purposes. And you need to write the bit. Documentation beats conversation. Write it down. I have log in my book, my magic book. I have written down where I am and what I'm doing. That makes it more documented and more valid. It's more valid. So document it. Doesn't take long. Take video. Take pictures. Write it down. Second point is you need to stay overnight. If you don't stay overnight, you're not traveling for business. So stay overnight away from your tax home. Third, it's the 4 only test. If you would go, even if it wasn't for business purposes, then odds are it's personal. But if you would travel, even if it wasn't for personal use, it's going to probably meet the business purpose test. For example, I'm going to go to Miami because I want to see a Miami Dolphins football game. But I also have clients in Miami. So I'm going to work it so that my purpose to go down is to see my clients in Miami, and I'd happen to go to a football game. Now, entertainment is no longer deductible at all. So that would be considered entertainment, unless I somehow figured out how to make it team building or something like that. But entertainment's not going to be deductible. So that was probably a bad example. But you make it so it's got a dual purpose, and the main purpose is your business expense. Then you have what's your primary purpose test. If your primary purpose is just to go see the redwoods, probably not going to be deductible. So your primary purpose needs to be the business, to profit motive. All goes back to intent and profit motive. Now, motive doesn't mean you're actually going to make a profit, because most businesses do not make a profit in their first 3 years. And most businesses fail by year 5. I did a quick commentary is a good way to put it, on hobby loss rules. They're now permanent. 3 of 5 years they want you to have, you can have a loss, but 2 of those 5 rolling years, you need to have a profit. Unless you have a horse ranch, and then it's 7 years. You have to have a profit in 5 of 7, or a profit in 2 of 7 years. And it's a rolling 7 years. Now, number 5, and probably the most important tip I can give you, is to keep good records. They cannot argue with you when you can produce receipts, logs, explanations written prior to ever going into an audit. You have the documentation right here on what you did, why you did it, and if possible, how you made money doing that trip. For example, I went on a cruise many years ago, 2016, and it was a corporate retreat type cruise, but I picked up 19 clients during that cruise that, by the way, are still clients today. So the purpose of that really was a corporate retreat business trip, and it really turned into an income producing trip because I charged them. So it becomes intent. Think about your intent. And if you go to an interesting place just to go, probably not going to win. But if you go to an interesting place that you can also make money at, probably going to lose or probably going to win. You have many different types of justifications, seminars, conventions. If that ties directly to your income or to your profession, 100% deductible. If the facility doesn't break out food on your bill, but it includes meals, they're going to now be 100% deductible, not 50% deductible. So there's some little tricks that you can do. Losing arguments, if you don't have proof that your business is there, then you're going to lose. You are going to lose. So always make it so you win. You set yourself up to win. I can't do that for you, but I can teach you how. So the more you know, the less you owe. Learn. Then you can take yourself from tax tragic to tax magic. Hit that like button so you trend me and tell me what it is you want to read or hear about. Make sure that you comment your questions. Any comments or questions, I'm going to read them personally and respond. And hit the subscribe button so that you don't miss anything coming forward. Because we have a lot with 100,000 pages in the tax code. There's a lot to talk about. Now, just to wrap up on the takeaways there, you have to have a profit motive. You need to stay overnight. You have the for only test, your primary purpose test, and always maintain good records in everything you do with the IRS. Thanks for watching. I'll see you in the next one.
This content is for educational and entertainment purposes only and does not constitute professional advice of any kind. Always consult with your tax professional. Be sure to read this full disclosure. Listener discretion is advised.